spilling all sorts of tea about what's going on in Washington, D.C., what regulators and lawmakers are thinking about and working on, and what you and your credit union should be evaluating in terms of risks and areas of opportunity. I'm your host, Ann Petros, NAFQ's Vice President of Regulatory Affairs, and today I am joined by Paul Davis, who is the Director of Market Intelligence at Strategic Resource Management, or SRM, and he's made the case that credit unions should consider offering buy now, pay later, or BNPL products. So we'll talk all about that today. Thank you, Paul, for joining me.
Thank you again for having us, Ann. I love the studio.
Yeah, we're lucky to have it, and really excited to make use of it for this podcast.
Terrific.
So, yeah. All right, let's dive in. So, right. BNPL. Let's just kind of lay the groundwork. What is it, first of all,
Sure.
and when did BNPL products become so commonplace? It seemed like this sort of came out of nowhere.
It does seem like it's an overnight sensation, but if you really think about it, it's really just a new take on an old concept in a lot of ways. I mean, you go back in the 50s, 60s, 70s, layaway programs became popular, where you would what happened there is you would take possession of the item after you paid for it, right? So now you've got this situation with the advent of technology, with remote purchasing, obviously, a lot of apps, and that was exacerbated by the pandemic. More merchants wanted to take the idea of somebody putting something in a cart and actually turning it into a purchase. A lot of times we'll go on a website, we'll put stuff in our cart, and then we'll forget about it or think better of it, right?
Right.
But the idea is, how do you capture that, complete that purchase? And so, so then you have a bunch of fintechs, non-bank folks like Klarna, Afterpay, coming in and offering this product. And in a nutshell, you're taking possession of the item now, but then you're all making essentially interest-free payments over 4 installments until you pay the item off. And so, essentially, it's layaway, but with a new kind of technological twist to it.
Sure. Yeah. So, a new spin on an old concept and product, but
that's how a lot of innovations really take place. It's really taking an old idea and making it new again.
Yeah, that's fair. But consumers seem to really like it. And, there are benefits certainly to consumers, but there are also some risks. Can you kind of walk me through both sides?
Sure. Obviously, I was talking to somebody about this yesterday. As a society, we've been making it progressively easier and easier and easier for people to spend money without necessarily thinking about the fact that they're spending money, right? So there's that risk that, somebody might be overly reliant on buy now, pay later and get ahead of their skis in terms of spending more than maybe they should. Right. So that's a clear risk. Obviously, there's a risk if you can't make the payments over the 4 payments because you have to actually pay for the product. And the person already has possession of the product. So it's not like you can say, oh, you didn't make the payments, so we're not going to deliver the goods. So Sure, there's a risk to the merchant, there's a risk to the consumer. I mean, inherently, there is an underlying risk to the financial institution that is involved with the product. And I'm sure we'll talk about it. That's why it's really important to try to mitigate that risk as much as possible.
Yeah, it's not like you can repo these consumer products.
Well, especially with people using it for things like gasoline and groceries. It's not like you're going to go and siphon the gas out of the car, right?
Yeah, it's done. But is it your sense that consumers really have an understanding of the mechanics of these BNPL products and the risks that they may pose? Or are people just kind of blindly jumping into these products and thinking, this is great, I can pay it off and no problem. And then maybe they get into a situation where they've got multiple, BNPL products.
I think that you have to talk about that like you would talk about any other credit product, right? With a credit card, for example, there are going to be a certain percentage of the cardholder population that is sophisticated, that does have financial education, knows what they're doing. And then you're going to have a certain element of the population that maybe doesn't. That's why one of the things that we would advocate is, having some kind of financial literacy, financial education tool to go along with buy now, pay later. Make sure the people who are getting into those purchasing habits understand the fact that, yes, you're going to need to budget. You're going to need to keep track of this kind of stuff. I think that's important. Right. However, there was a recent study that we saw that is looking at how we're seeing older Americans and more affluent Americans start to grow comfortable with buy now, pay later.
Oh, really?
So we're thinking you're looking at bigger ticket purchases there. And in theory, just totally in theory, they would be better, kind of buy now, pay later customers because they obviously have the ability to pay on the item. They're older, have more experience in this, but yeah, to your point, there is going to be a part of the population where you're going to need to make sure they understand the risks and the potential pitfalls from overly using that product.
Right. Yeah. And I think the concern really is that, there's an intent to target those individuals who maybe are not as sophisticated or not as financially literate.
Sure.
And that there's some sort of predatory practices going on here. Do you feel that is true, or not so much?
You could look at it that way. The other way that you can look at it as well is it's also an opportunity to bring in unbanked and underbanked people and bring them into the financial system. It could be a tool for financial inclusion, but again, you have to have that those elements that folks like the CFPB are going to want to see, right? That's going to be some kind of financial education. You're going to have clear terms and disclosures. You're going to need to make sure that the rates aren't predatory, those types of things.
Right.
I mean, if you check those types of boxes off as a credit union, not only can you potentially make the CFPB comfortable with it, but you're also, again, that's bringing more members into the financial system.
Right. Yeah, definitely. And, I think that is important when we talk about things like unbanked and underbanked. And as more and more consumers are using, these sorts of non-traditional financial services and, turning to non-banks, obviously we'd love everyone to bank with a credit union, but, are they really unbanked if they're using these sorts of products? It's a way to bring them into the fold.
Right. And you can over time potentially transition them from a buy now, pay later habit to potentially a credit card, or even better, savings and products, so they can actually not only buy what they need to, but then you can teach them saving habits and hopefully build wealth over time as well.
Yeah.
I mean, that's the ideal transition of a member, right?
And I mean, I guess this could potentially supplant something like your secured credit cards, though, or just be an alternative.
Well, and that's one of the reasons why in our research at SRM, we've advocated credit unions explore, not necessarily pursue, but at least be educated and explore buy now, pay later, because there is that potential of it disrupting the natural kind of account holder relationship for credit cards, debit cards, because if people are going to be making more purchases on buy now, pay later, they may not be using their regular cards, their traditional cards.
Right.
Yeah.
So, you think there really is a business case and reason for credit unions to consider this as just another product in your, suite of products and options for your members, maybe younger consumers, and, could be a way to attract and grow membership, right?
Yeah, I mean, the data generally suggests that buy now, pay later usage is higher with younger folks. Again, we are seeing older, more affluent people start to pick it up as well. But you're right. It is a way for potentially a new entry point with younger demographics, bringing in younger people into credit union membership. Again, but you have to just make sure that it's done the right way. And again, the other thing we point out is just like when we talk about crypto or digital assets, again, I can't emphasize enough, education is key. You do your homework, do your due diligence, understand the risks, the opportunities, and understand that you need to make sure you have the structures in place so if a regulator does start asking questions, you can just document and show them that you did your homework.
Yeah. Well, and I mean, credit unions are not strangers to the compliance realm and have compliance officers and are always worried about what the CFPB is going to do next. And so that doesn't seem like, unfamiliar territory, let's put it that way. But, getting comfortable with the idea of offering something like this, which is, in some ways an unknown product. It
Mm-hmm.
does carry risk. It's a little novel. And we don't yet know what the CFPB is going to do. I think that is where
Mm-hmm.
the hesitancy
The
is.
fear of the unknown is definitely something to be to take into consideration, for
Yeah.
sure. But to your point, credit unions, banks as well, already have that compliance apparatus for other consumer products. Um, they are already generally well versed at evaluating creditworthiness and risk.
Right.
Terms and disclosures are pretty much a standard thing anyway. So I find that credit unions are already, by and large, meeting the expectations of the CFPB in a broader credit sense. But to your point, we don't know what CFPB is going to do in terms of this specific product.
Yeah, but the financial literacy, I mean, so many credit unions already put a lot of time and effort into ensuring they have programs in place to help their communities and their members really understand what all these various products and services are and the risks that they carry. So it seems like a natural fit to just incorporate that here.
It does, and in fact, I know I'm in North Carolina. One of the local credit unions sponsors a high school, and they actually have a credit union inside the high school for the purpose of providing educational opportunities, financial literacy programs for teenagers.
That's great.
Yeah.
Yeah.
So, I mean, that apparatus exists, obviously,
Right.
for that
Yeah.
particular demographic.
Yeah, exactly. And you mentioned, how the study that you cited shows that older Americans are, more and more interested in these BNPL products and starting to use them a little more frequently. And so, as credit unions are increasingly faced with an aging membership profile, you really think that this could be kind of key to attracting those newer, younger members and building, sustainable membership and growth throughout.
Yeah, I think so. I mean, you also just remember that you're taking buy now, pay later, and it's just one tool in a much larger toolbox. I mean, that's the other thing we advocate. We're not saying that you should just jump into it as a standalone. Buy now, pay later can just be one element of a broader payments ecosystem that you have at your financial institution.
How do you target those younger consumers? And I mean, I think that is a $1 million question, right? If we had the answer to that,
we could do an entire segment just on that topic alone.
What are your thoughts?
Well, number one, I mean, I think the key with the buy now, pay later product is to remember that you're working with the merchants on the merchant side,
right?
Not really on the consumer side. So, we were talking about this earlier. You go to a clothing app. It's not like that clothing app has 4 different buy now, pay later options. That clothing app is working with Afterpay or Klarna. So, number one, maybe when you're trying to figure out what merchant relationships you can be involved with, you look for the merchant relationships that have that particular demographic. Pair the merchant with it. So, again, I'm not sure what the Gen Z merchants are right now, but you identify the merchants that have a strong following from younger purchasers, and maybe that's one way of helping decide what kind of relationships you're going to have.
And maybe that would require some market research and some partners to help you figure out exactly what that looks like and how to get involved.
I mean, again, due diligence, do your research, bring in someone from the outside who's well versed in the area to come in and just kind of help you get a lay of the land. Again, this is obviously because of the potential implications with credit, with reputational risk, with the regulatory environment. You're not jumping into the deep end of the pool. You're kind of wading into it slowly to see how comfortable you feel.
Now, you mentioned reputational risk. So if credit unions are considering offering a BNPL product, how do they weigh that reputational risk and other risks, potential CFPB scrutiny, whatever rulemaking, if it gets to that, may come out, in developing and rolling out this product that, like I was referencing earlier, has been shown to kind of target some of these individuals who are already in poor financial health. Right. We've heard from some of our members that, they're helping some of their members who've taken out these BNPL products and have just over leveraged
Mm-hmm.
themselves and
Right.
are in a cycle of indebtedness and don't know how to get out, and they need
Mm-hmm.
help from their financial institution whom they trust,
Mm-hmm.
more than these servicers. So, how do you balance that?
Mm-hmm.
And suddenly you're the financial institution that,
Right.
oh, we're offering it too.
Right.
But you can trust us. It's okay.
Well, and that's true. So, no, also not only on the regulatory side, but the legislative front. You never know when Congress would want to take up buy now, pay later and get involved as well.
Right.
And to your point, yeah, the research shows that a large percentage of the population would like a buy now, pay later product from a trusted financial institution versus the fintech startups that are offering them. But I think the data was like 70% of small financial institutions are really reluctant to do so.
Right.
But to your point, I think you just have to do your homework, treat this, and understand that this is a credit product, just like your credit cards, like other secured credit products.
Mm-hmm.
And just again, when you're dealing with those younger demographics, younger folks or underbanked folks, those kind of demographics, stress that idea. They need to, maybe an idea might be, have them take an financial educational course to qualify for the buy now, pay later product.
Yeah.
I mean, we're just riffing, spitballing this a little
Right.
bit, but maybe you do something like that. Maybe part of the requirement to get the product is to just take a class or be walked through. Here are the risks. Here's what you want to avoid doing with this product. That might be one way to mitigate risk.
Right. Some sort of counseling. That's
Some kind of,
mandatory.
which again is something that a lot of credit unions already do in the community anyway.
Right. Yeah, definitely. But this would be, tied to this particular product, and
and it's something to show the CFPB. Look, we're not just offering this and having people just dive in. We're trying to also use this again as a tool of financial inclusion and bringing people into the system.
Right. Yeah.
So they're not going to payday lenders. They're not going to go into the other places where we have seen a CFPB crack.
Yeah, and you're demonstrating good faith, and this is being done with a good intention. We're trying to help the community and not take advantage of consumers that may be
precisely
in a precarious position anyway. But again, the uncertainty with the CFPB, I think, is the biggest issue. What sort of regulatory action do you think would reduce that uncertainty for credit unions that are interested or thinking about, ways to get into the BNPL space? Is there something in particular that you think would tip the scales?
I think credit unions just need to really closely monitor anything that comes out of the CFPB. I mean, we do that at SRM with not only with buy now, pay later, but pretty much any product. Because you're going to see that the CFPB puts out blogs, they have speeches. Just listen to, just see what, they're kind of, they'll tease out policy in a blog or a speech before they will put out hard guidance or before they hit somebody with a penalty. So that's the first thing is, just keep track of what they're saying on their social media or on their website. Number two, when they seek comments, know that those comments are not just there just for fun fact finding and information gathering. That's going to clue in that they want to do something. And then also, if they do at some point hit one of these non-banks, hit a fintech with some kind of penalty or a slap them, or some kind of something, take note of why they did it. Take note of what they're requiring that lender to do to rectify the situation. Just make sure you're following those things very closely, crossing your T's, dotting your I's, and document everything that you're doing to show the CFPB or any other state or federal regulator that you're in good faith trying to do the right thing.
Yeah, that's a great point. Any supervisory guidance that comes out from the CFPB or enforcement action against
the enforcement actions, I think, are really telling.
Yeah. Should be then, melded into your compliance program and your risk analysis and assessment and the way that you go about, offering this product and engaging with consumers, about this, because that's where, for a fact, the CFPB is going to pay attention.
Right.
So that's really no different than any other, regulatory area, any other lending product.
And that's the underlying premise of the report that we put out, and why we think buy now, pay later does have a role in mainstream financial services, because credit unions already have the apparatus in place. They already have the structures in place. For other credit products, you just have to figure out if those can be adapted or tweaked to fit this product.
And there are some entities out there, QSOs or otherwise, that are, already talking about this and trying to help, credit unions that are interested
Right.
maybe develop this program. Is that correct?
I think so. Yeah. I mean, and not just with buy now, pay later, but you're seeing QSOs start to kind of coalesce around digital assets. You're seeing taking the banking as a service concept and applying it to credit union as a service. So you are seeing through QSOs and other fintech partnerships that kind of evolution, and buy now, pay later in other areas as well.
Yeah. And now another issue with the buy now, pay later product has been, until recently, when the credit bureaus announced that they were going to start including this type of product in consumer reports, that this really wasn't being reported as a positive credit element on credit reports.
Sure.
So would BNPL be more viable as a model if providers could use hard credit checks as opposed to soft credit checks? And how would that change the dynamic?
Yeah, so I thought about that quite a bit when you mentioned that a few days ago. I think it can work both ways. I mean, obviously, if you do a hard credit check, there's going to be, that's going to show up, right?
Right.
And we've talked about, soft credit checks. Are you really mitigating risk enough with a soft credit check, right? There are instances where I think you could use a soft credit check, but you're going to have much more restrictive policies on the back end of that buy now, pay later relationship. For example, maybe, again, you have that educational element at the beginning. Then you maybe have a low credit limit of how much they can actually spend on your product. Let's say $1,000 cap. So and then the other thing is, I'm trying to remember, but I think it's an element with Apple Pay. If they have a buy now, pay later customer who misses a payment, then they lock them out of buy now, pay later until they can get current as well. So maybe there are ways to have lower initial credit limits, a way of saying, okay, if you're not going to be current, we're going to freeze the account. Educational element, that might be a way where you can mitigate risk, but also not have to go and do a hard credit check.
Right. Yeah. There's certainly, ways to put limitations on consumers' continued use of these products if they are demonstrating that, they're a riskier member or consumer, and maybe prone to delinquencies.
And also selecting your merchant partners too as well. I mean, so another way we've seen a use case is maybe you're the buy now, pay later provider for larger ticket items or for things like that, and avoiding being the buy now, pay later option for everyday purchases as well. There might be that also. So selecting your merchant partnerships is important, but then also just knowing how to have those checks in place on the consumer side.
Right. I mean, do you think that there's anything inherently wrong with consumers relying on BNPL products for everyday purchases, or should it just be for these larger ticket, once in a while kind of items?
Well, that's a very good point, and especially now that since we've been seeing the inflation that we've been seeing over the last few quarters, more people are using credit card usage is up, for one thing.
Right.
Buy now, pay later adoption is up. And I think a lot of that is a reflection on everyday goods are more expensive. People are feeling stretched. I think they were in June, the average cost of everyday goods in the month of June was up $400 from a year ago. So
yeah, everything's expensive.
And a lot of people just don't have an extra $400 to do it. So they are relying on credit products. That's something to be very mindful of.
Right.
But so to that point, yeah, I think the buy now, pay later product is probably more viable if it is for larger purchases as opposed to everyday items, because you don't really want somebody to be dependent on credit products to put food on the table.
Right.
There's other solutions that financial services companies can work with somebody on, hopefully, so they don't have to rely on credit products just to put gas in their car.
But as a financial institution, how do you monitor and limit, how the member uses the product?
Well, I think that goes back to the idea that the buy now, pay later relationship is really through the merchant. It's a merchant relationship. So again, if you're working with, I don't know, a home improvement store. If you're the buy now, pay later option for the home improvement store, you're picking that relationship, and hopefully and so there's some control over what's being purchased there. Now, of course, with a home improvement store, people can use it for smaller items as well. But at least if you're aware that that's the relationship, then you can hopefully pick those merchant relationships to avoid targeting people who are relying on it for everyday goods.
And, if a credit union is interested in considering, buy now, pay later product and developing this product, where do they start doing the research? Who's out there to help them navigate this space?
Sure. There's going to be outside folks that are well versed in this. Obviously we have folks at SRM, colleagues of mine who are looking at this. Obviously that's why we put our report out. We're following this, so we certainly have opinions. So, I would say start with our report, kind of get a sense of a lay of the land, and then there are going to be resources to look into it further. I assume credit union associations are looking into this. You guys are probably tracking this as well. That would be a place to go. Talk to other people who are also looking into this. Again, I find one thing about the credit union community is there's a certain level of collegiality to it, not just cutthroat competition. So talk to your peers about this. What are you thinking about this? Here's what we're thinking. And get a sense of that kind of build that kind of ecosystem where you can really just share information and have a better understanding before you dive in.
Sure. Yeah, that's a great point. And NAFCU offers some networks. Our, compliance risk and BSA network is just that, a forum where, members can participate in, a spirited discussion on pretty much any topic.
Right.
And people ask all sorts of questions. And so, I encourage you all, the viewers today to take, that opportunity and ask questions about BNPL or anything else, in those networks and have that discussion with your peers, because that's a great point. If other credit unions are considering it, that's probably your best avenue to figure out how it might be an option for your institution.
And it goes to just beyond not just there with buy now, pay later, but again, talking about financial inclusion, financial literacy. Those are also areas where maybe you could discuss that with your peers and incorporate certain elements into a broader buy now, pay later program as well.
Right. Yeah. Well, hopefully the CFPB is satisfied with what they see as financial institutions start getting involved in this. And, there's always a concern of, UDAP, the unfair, deceptive, acts and practices, and
truth in lending. There's so many places where you can get tripped up with a buy now. If you don't do it properly, there are so many ways to get tripped up through various acts that are out there.
Yeah, and the concern, with the Truth in Lending Act is that, the way that these BNPL products are structured with the pay in four model is that, it skirts some of the disclosure requirements under TILA and, the other regulatory consumer protections in place. And so it's seen as kind of I guess sketchy might be one word for it, a product that
painting around the edges.
Yeah,
might
exactly.
Be a way to look at it. Yeah, but again, I feel confident that most credit unions are probably not interested in painting around the edges because that's going to be a disservice to their members, and member service is a huge underpinning of the model, right?
The appetite's just not there.
Correct.
Credit unions are generally risk averse and don't like to
Right.
operate, in the fray.
Right. But that's an opportunity, right? Then that's still an opportunity to come out with a product that has the flexibility elements that people are used to with buy now, pay later, but then incorporates those kind of core values that credit
Right.
unions and traditional financial institutions have been relied upon for years.
So, and I think this is especially, important when we're looking at, what the CFPB is doing with respect to, their potential rulemaking on fees, the junk fees, quote unquote, issue that they've been paying attention to, whether that means there's going to be some sort of action on, the overdraft
Right.
rulemaking. And we've seen a huge shift in the industry there, and a lot of institutions are doing away with or significantly scaling back,
Right.
their overdraft and NSF fees. And so, this is just another product that, maybe could help to kind of lessen the burn from from all of that.
I completely agree, and we make the same case with talking about being open-minded towards digital assets as well,
Right.
because the old models are being constricted and constrained, right? The old fee models, overdraft, NSF, those types of things, and in order to still produce a certain type of performance, you're going to have to be open-minded and look at other revenue channels. And that's what we try to make the point is buy now, pay later is an opportunity, but not one to go into, go in blind.
Yeah, certainly. Well, any other, final thoughts before we close out?
Sure. We were talking about this too. I understand too that buy now, pay later is going to evolve outside of potential just consumer or retail application. I was just reading this morning that there's a fintech out there that's now going to come out with a B2B buy now, pay later kind of
that's
product.
interesting.
Yeah. So, if you're a small business and you suddenly have to buy office equipment, I don't know, copiers or something, some kind of, office equipment, they're going to allow you to also then be able to pay for that over an installment period as well. So that's something to keep in mind too, because I know a lot of credit union members probably are small business owners as well. So there might be a natural progression of the product over time for commercial applications, not just
Right.
on the retail side.
So this could be a really dynamic product, maybe start with the consumer side, but something that you can offer to your business members that, is an easier product to wrap your mind around because, obviously credit unions have the MBL cap too. So
That's true.
these are smaller loans.
I mean, I think, we're in a time right now where the financial services industry is in constant states of evolution and innovation. Fintechs have accelerated that. The pandemic has accelerated that. Much more remote transactions, contactless transactions. And, the bottom line is, the financial services industry, as we know it, is going to be a lot different in 5 to 10 years. Significantly, much more different than it was even 10 years ago. So we have to continue to educate ourselves on new products, new opportunities on the revenue side, or, just continue to feel constricted on the old ways of doing things.
Absolutely. All right. Well, that gives me a lot to think about and hopefully our viewers a lot to think about as well. And that does it for today's episode. So thank you so much for joining me, and I really appreciate, all of your insights on this, and stay tuned for the next episode of the CUPP. Until next time.